Hello everyone, welcome back to All Financial Discussion channel. For this video, I like to discuss the investment onto property in Singapore. Before we do any form of investment, it is always very important to understand the pro and also the cons. So therefore, the objective of this video is to discuss the pro and also the cons of property investment in Singapore. Guys, before I continue, I'd like to urge you guys to help me by like this video. Just give me a few seconds. Press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. Before I kickstart the discussion, a quick disclaimer. I am not a licensed financial advisor. The content in this video is for entertainment and education purpose only and should not be considered financial advice. In this video, I'm simply showing you what I may be doing. Please conduct your own independent research and consult a professional if needed before you commit to an investment. Never invest more than you are willingly to lose, and always be sure to read the fine print and the terms and conditions before you commit to an investment. Let's kickstart the discussion. Singapore real estate market, in fact, has been a strong magnet for investors, not only locally but also international. With its stable income and also the well-developed infrastructure, plus the strong regulatory framework, Singapore, in fact, offer a range of opportunity for those that are actually looking to invest in property. However, like any investment, so the real estate come with the pro and also the cons, and therefore the investor should be carefully consider this before invest into the property. In this video, we are going to explore the advantages and also the disadvantages of investing in Singapore real estate market. Before we kickstart the pro and cons, let's quickly understand the property landscape in Singapore. So in Singapore, about 78% of households actually live in HDB flat. So HDB flat look something like this. So basically it's a public housing system in Singapore. So a smaller portion, about 17% actually stay in condo. So basically this diagram here show a condo. Condo typically has a confined area. So basically quite a fair bit of percentage of people living in condo, but majority stay in HDB. Even lesser, around 5% actually live in a landed property. So basically this is a landed property. So the remaining 0.2% live in other type of housing. For example, apartment, maybe they rent out, etc. So most condo and landed property are categorized as private housing. So HDB are the most affordable housing option, while landed property are the most expensive. You can take a look on this so-called chart over here. So for HDB, you can see that the average price is about 600K. So basically for condo, it's about $1.9 million. As for landed, you can see that the price become $5.3 million. So to put things into perspective, the median price of condo are 3 times higher than those of HDB flat. So from here you can see that it's about 3 times more than the price of HDB. So this is the price of condo. For landed property, the price are almost 7 times higher as compared to the HDB flat. So when we actually compare the average price per square foot and also the average unit size, the difference become even more clear. So we want to do a quick comparison between HDB, condo, and landed. So basically, I like to focus on this column here, which is the average price per square foot here. What will be the average size? So basically from here you can see that HDB flat and condo, they are more or less having about the same size. As you can see from here, they are having almost the same size. However, condo costs 3 times more than the so-called HDB. As you can see from here, okay, you can see that the pricing is almost 3 times more than HDB. The landed property, however, can offer roughly 3 times the space. Okay, you can see that the landed actually has almost 3 times the space of condo and HDB. Okay, so but okay, they also maintain a similar price as compared to condo, as you can see from here. Okay, so therefore the overall cost, okay, is actually much higher. Okay, so this actually make landed unaffordable for most to afford in Singapore. Okay, because the land size is huge. Okay, so therefore almost the price is almost the same as condo, but with a huge land size. So therefore the so-called the premium to own the landed become very scarce. Okay, so next I'm going to show it to you why we need to do property investment in Singapore. Okay, so basically this is from 2000 all the way to 2024, end of 2024. You can see that the price index actually went up drastically, especially after COVID. You can see that the price only go up and up and up. Okay, but keep this in mind, this is actually the price index of HDB resale flat. Next, okay, so basically this is for the private property, which is for the condo and the landed. Again, you can see that the price actually increased in a drastic way, especially lately. Okay, we can see a huge spike in terms of the price of private property. Okay, so therefore, this make property investment in Singapore very attractive. However, please be very, very careful. Okay, so there is nothing that can go on and on and on. And moreover, okay, so this video, okay, I'm not going to urge you to do investment, okay, onto property, okay, but I'm going to explain the pro and cons rather than urge you to invest property in Singapore. Okay, so basically, this is actually the key objective of this video. It's just mainly focused on the pro and cons. If you decide, okay, to do some form of investment onto the property in Singapore. Let's come to the pro, okay, of the property investment in Singapore. Because Singapore politically is very stable and also the economy is also very stable. Okay, so Singapore is renowned for its political stability, transparent legal system, and strong rule of law. Okay, this create a safe, predictable environment for investment. The economics is robust and diversified, which help protect property values from extreme volatile. Okay, so the Singapore dollar is also a strong and stable currency. Singapore real estate market has historically shown resilience even during economic downturn. Over the long term, property value have tends to appreciate steadily, offering investor the potential for capital growth. Okay, so over here, this is very important. Okay, in terms of politics, we are very stable. Okay, we have this transparent legal system. Okay, so why this is important? Okay, because this actually urge everybody. Let's say you buy a condo, everybody will pay the maintenance fee. Okay, if not, it will become a very big issue. And also, okay, the because of the stable okay, in terms of Singapore dollar, okay, so because Singapore dollar, let's say you imagine they go up and down, and this can be disabled. Okay, let's say if you are a foreign investor, so therefore this is the first point, the pro of property investment in Singapore, politically and economic stability. Next, strong and transparent property market. Okay, the market is well regulated by government agency like URA and HDB. Information on transaction, price, and supply is readily available, reducing information asymmetries. This transparency actually help investor to make informed decision and reduce the risk of fraud. Singapore has a transparent and well-regulated legal system which provide investor with confidence and security when actually purchase a property. Property rights are well protected and the legal process for property transaction is efficient and straightforward. Okay, so basically this is point number two on the pro of property investment in Singapore. The third one, okay, because there is a high rental demand. As a global financial hub, Singapore attracts a large pool of expatriate and foreigner talent who form a steady base of tenant. Okay, basically, all these foreigner experts, they actually rent a house. So therefore, because of this, we are going to have a high rental demand. The large local population, including young professionals and families who may be waiting for their own homes, also contribute to the strong rental demand. Okay, so nowadays in Singapore, to be very frank, for some very young professional, they actually don't want to buy. So instead of buy, they actually rent. Okay, so basically because of all this actually contribute to high rental demand. Next, potential for capital appreciation. Okay, while not as explosive as in the past. Okay, so in the past, in fact, property investment gain is much more attractive. Okay, although it is not as good as in the past. Okay, however, for those well-located property, okay, for example, in Prime District, which is near to the MRT station or in area with future development plan, okay, they still have strong potential for long-term capital appreciation. Okay, so the land in Singapore is very scarce. Okay, so therefore this actually support property value over the long term. Next, okay, coming to the leverage and favorable financing. Okay, so interest rate for home loan in Singapore, they are actually transparent. Okay, so basically you can go for different bank loan, okay, to so-called to have some mortgage. The investor can use leverage a bank loan, okay, to amplify their return. Okay, so imagine this. Okay, in fact, you can take a loan, and basically the loan amount can actually help you to amplify your return. Okay, so if the property value increase, the return on your initial equity can be significant. Okay, so the point number six for the pro of investment in Singapore, a saver haven for wealth. For both local and foreigner investors, Singapore real estate is considered a safe haven asset class. It is a tangible asset that can preserve and grow wealth, especially during times of global uncertainty. Okay, so therefore, this is my advice. Okay, when the so-called economic become uncertainty, it is always good to invest property in Singapore. Okay, I must emphasize in Singapore. Okay, because you can see so-called world in the world now, okay, a lot of the places, okay, the property actually drop. But in Singapore, it's actually very strange environment. Okay, so instead of dropping, okay, so in fact, Singapore property rise. So therefore, when you have any form of uncertainty, it is always good to consider to switch your investment into property in Singapore. Next, diversified property option, investor can choose from various property type. Okay, so but not for HDB. Okay, HDB most of us don't do some form of investment. Okay, because HDB foreigner cannot buy. Most of the time we will actually invest in condo. Okay, and then if possible onto landed property. Okay, sometimes you can also consider to expand your investment into commercial and industry units. Okay, but all this they actually have a different risk return profile. Okay, so guys, before I continue, if you have benefit from this video, please help me by like this video. Okay, so if I have more likes, I will be able to reach out to a larger audience. So guys, help me press the like button now. For those who are new to this channel, and if you have learned something from this video, urge you to support me by subscribing to this channel and turn on your notification bell. Once again, thank you so much for strong support. Next, I like to come to the cons of property investment in Singapore. So in Singapore, we actually have a very high entry cost. Okay, what does this mean? I'll come to this. And also there is a capital outlay. Okay, so Singapore has one of the most expensive property markets in the world. Okay, so this is well known. Singapore property, in fact, is one of the most expensive. And the initial down payment, okay, so for local, okay, we need to have a down payment around 25 to 30%. For foreigner, the down payment need to be at least 60%. Okay, so this is actually a very significant barrier to entry. Okay, so next, we also have this additional buyer stamp duty. Okay, so this is actually for Singaporean, PR and also foreigner. Okay, so later on I will explain what is actually this additional buyer stamp duty. Okay, so this actually dramatically increase the upfront costs. Okay, coming to this additional buyer stamp duty, what is this? This is actually government control. Okay, so government has this cooling measure, okay, to cool the price of the property. So therefore, they have this additional buyer stamp duty. Okay, so basically, this is the biggest deter for investor. For example, for Singaporean, okay, if we buy the second property, okay, we need to pay at another 20% more. So this 20% is known as additional buyer stamp duty. And if you have third property onward, you need to pay another additional 30%. Okay, so this is for Singaporean. For PR, the first property you need to pay 5% more. Okay, so basically this is a additional buyer stamp duty. And then from here on the second property, you need to pay 30%. As for the third and subsequent, you need to pay 35% more. As for foreigner, okay, very clear cut, a flat 60% is actually required when you actually purchase any private residential in Singapore. Next, we have this loan to value LTV limit. Okay, so basically they actually limit the amount of loan that you actually can so-called apply for. So this actually tighten the limits. Okay, means that you can actually borrow less, which also require you to so-called have more cash upfront. These measures are designed to cool the market and prioritize housing for owner-occupiers, making it expensive to hold multiple property. Okay, so basically this is the government deter, okay, from people to speculate the property in Singapore. Next, we come into the illiquidity and transaction costs. Okay, real estate is not a liquid asset. Selling a property can take months and even process like viewing, negotiation, and legal work. Okay, so which means that this thing cannot be instantly. Okay, which means that there's no way that you can instantly sell a property where you can so-called receive your payment instantly. The transaction costs are high. Okay, beside ABSD, okay, you pay buyer stamp duty. Okay, so basically this is a flat 3%. Okay, so even for Singaporean first property, you still need to have this buyer stamp duty, which is 3%. And when you actually sell, okay, we actually has this seller stamp duty also. Okay, for example, when we actually sold the property, okay, within the 4 years, we need to incur this seller stamp duty. Anything after 4 years, okay, it will become a zero. And also the legal fee and agent commission also add up. Okay, so basically this actually make up the cons of property investment. Next, the ongoing financial commitment. Okay, we have this mortgage payment. Okay, so a non-negotiable money outflow which can become a burden if the property is vacant. Okay, which means that if we are not able to rent out the property, okay, the money okay that we need to pay for the mortgage need to be served. Okay, so basically there is no way that you can so-called negotiation. So this is actually a biggest con. Property tax. Okay, so investment properties are taxed at a higher progressive rate. Okay, so basically in Singapore, okay, we actually have this so-called property tax. If this is not the property that you are staying, they will actually collect a higher tax. Okay, so this is what it means. Okay, so roughly about 12 to 36%, okay, for 2024 and beyond. Okay, so basically this is again to deter people from investing property without staying. Maintenance fee. Okay, so condo have money sinking fee and also maintenance fee. Okay, so this can be quite significant also. Okay, so imagine this, if you are not able to rent out your property, you still need to serve your maintenance fee. This can become a big issue also. Next, in terms of repair and upkeeping, okay, so the cost for fixing the appliance, repainting, and other maintenance, okay, so all these can be quite costly. Okay, so from here you can see that these are all the ongoing financial commitment. Okay, so every month you need to pay for your mortgage. You also need to pay a yearly property tax. From time to time, you have some form of maintenance and also the repair and upkeep, okay, to make your property attractive to so-called to rent again, to serve the ranking again. Next, tenant related risk. Okay, so the vacancy risk. Okay, so there is no guarantee of 100% occupant rate. A vacant property means zero rental income while you still pay the mortgage and other fees. Okay, so bad tenant. Okay, so the risk of tenants who pay the rent late, damage your property, or even breach the tenancy agreement. Coming to the point number 6, the con of property investment in Singapore. Okay, market. Okay, basically the interest rate. Okay, the market interest rate may go up and down. Okay, when they actually go up, you need to serve more. Okay, so while stable, the property market still goes through cycles. Buying at a peak could mean seeing your property value stagnant or decline for several years. The rental yields are often only slightly above the mortgage interest rate. So if the interest rate rise significantly, okay, as we can see this in recent year, it can quickly erode your rental profit or even push it into the negative territory. Okay, so this is also very important. Okay, let's come to the restriction for foreigner investor. Foreigners are generally, okay, they are not allowed to purchase landed property unless with special approval. Okay, so you need to write into URA, okay, if you are foreigner and you want to buy landed property. Foreigner also cannot purchase HDB flat. Okay, the 60% ABSD actually make it extremely very costly, limit the investment mainly to the luxury segment. Okay, so this is actually the restriction for foreigner investor. Coming to my last slide, okay, so basically I do this quick summary and who is it for? For the property investment in Singapore, this may be suitable for people that is high net worth individual, okay, who can absorb the high entry cost and ABSD. Okay, so for foreigner, okay, you actually need to have 60%. Or if you want to buy second property for Singaporean, then you need to incur the ABSD. Long-term investor, okay, so with a strong holding power of more than 10 years, okay, to ride up the market cycle. Okay, so you must have a strong holding power. Okay, I don't think majority of us will hold more than 10 years if this is for investment. Okay, so basically roughly about 5 years, okay, for investor, they actually will sell off the property. Singaporean and PR, okay, buying their first or second investment property, leverage their CPF and avoid the highest tier of ABSD. Okay, so therefore, for Singaporean, okay, most of them, let's say this is your first property, then this is for you, okay, to do some form of property investment in Singapore. Those that seek a stable, tangible asset as part of a diversified portfolio. Okay, so basically, you probably have invest in your share or in whatever form here, but this property investment actually diversify your portfolio. Okay, so property investment is slightly not suitable for those first-time investor with limited capital. Okay, so because property actually come up a huge capital, and if you have limited capital, then this is probably not for you. Those seeking short-term gains. Okay, so basically, remember I told you that we have this seller stamp duty, which is 4 years, which means that you must at least, okay, last for 4 years. Okay, so basically, if not, okay, so basically this may not be suitable for you. Foreigner investment without a very large budget. Okay, so because of this 60% ABSD, so if you don't have a large budget, then this is probably not for you. Anyone who cannot withstand the risk of vacancy or rising interest rate. Okay, so basically in short, okay, if your unit there's no one rent your unit, okay, so you don't have any form of collection of rental, this may become an issue for you, then please do not do property investment. With this, I'd like to end my discussion. Please help to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.